Hello, everybody. John Blank, Zacks Chief Equity Strategist and Economist. And today is Monday, May the 18th, 2026. I'm going to go through a lot of slides and that are broken into two sections. One is about our industry growth narrative, particularly centering on the infotech story and its expansion, which has been driving the stock market for 4 years now, at least. And then I will dive into a related subject, which is the global renewable energy expansion that is coming along with this industry drive in electronics and infotech and chips. So, my title of my talk is Structural Change or a Cyclical Bubble. Number one, we're going to go through a deep dive into the investing insights that come from 16 Zacks industries. And embedded within that is going to be these tech industries. So we're going to study, we got to put in a context for these tech industries what's going on around it, because it's not all boom in its environment. And that is also quite interesting. So first off, let's look through these industry codes. They go in the Zacks system from 1 to 57 this time around, but really what you want to pay attention to is the name of the industry and the top 10 tickers, the top 10 by market cap. So you've got apparel, beverages, consumer products, miscellaneous staples, food, drug, retail, steel, industrial products, machinery, building products. So you can already see that these are consumer industries. These are industrial industries. And then down here, keep in mind, 31 is computer office equipment, which we conclude Micron, Seagate, AMD, Silicon Motion, IBM, Cisco. So basically, the chip companies are going to be in 31. So that is considered office equipment in the sense that it's chips that are for office equipment. Electronics. Again, here you're going to find ASML and Taiwan Semi. So here's the semiconductor fabs, and we're putting them in this industry. So basically, consider 31 and 35 to be this story of all these chips and all this stuff that's going on. Telecom equipment will also play a role here. You'll see Ciena's here, Corning's here, and Nokia and Ericsson and Qorvo is here. So this is for communication. And again, of course, Qorvo is a chip company, so we do have some chips here. Telco services is your typical player like Vodafone is here. Korea Telecom is here. This will be your typical phone service company. We will get into the oil companies, machinery, the integrated companies. A lot of these are international firms. You can see BP, Ecopetrol. We'll talk about the major banks, and of course, we'll talk about the airlines. They play a role right now. There's United and there is Delta. So this is the backdrop. We've got a broad sector: banks, industrials, oil firms, consumer staples companies, and of course, these electronic companies that I want to talk about and focus on. All right, so first off, let's look at things this year, 2026, that are not doing so well. Last year, there actually was pretty good for some of these apparel companies. Of course, not because of the tariffing situation, particularly China tariffs, Vietnam tariffs, things like that, Bangladesh tariffs. And of course, this year, because of the oil shock, these returns are all basically negative. So apparel, not happening. We'll skip beverages. Let's talk about miscellaneous staples here. Again, for the most part, declining. So basic consumer product groups are not doing so well. That's concerning, and we got to keep that in mind. However, what's continuing to do well is the steel industry and the machinery industry. So there is some heavy equipment making and steel making that's going on in the United States from the tariffs that is actually deemed positive. So we are seeing evidence, at least from the stock market perspective, that there may be some growth that can come from those industries. Now, here we get into the story I'm going to focus on today: Micron, Seagate, of course, AMD. Incredible runs last year, 240%, 225%, and incredible runs this year, too. So 2 years of boom for this electronics, office equipment, nexus. Electronics not quite so strong as office equipment just because these are the bigger cap names. You can see these are, for the most part, extraordinarily strong and growing their market caps hundreds of percent a year. So again, almost universal industry pull across the board for these groups. I can only find a couple groups. IBM would be the example where you see some pullback this year, but basically no pullback for everybody. Telco Services is another group that's related to this, and you can see they are doing extremely well as well. So this entire group up here is doing great. That's not the story that you need to focus on. There are things that are declining. The banks are not doing well this year, and the airlines are not doing well this year because of what's happening in the Iran conflict. So again, we've got stories of just this one isolated boom in this space that we all know about, and you've heard from numbers of people, but let's get into the details. So here's some interesting tidbits about these 16 industry. And I want you to note that there's lots of international companies that led the way in 2025. So go through this at your leisure. I want to point out just some of the names here. Of course, Micron is in this the world's largest manufacturer of DRAM and NAND memory. With this group, ACM Research, ACMR, and electronics, that's semiconductor wafer cleaning and processing equipment, chip manufacturing. So again, basically the same thing. Down here we got Ciena, ticker CIEN. It's high-speed optical networking. So this is the story of these data centers, whether it's connecting them, supplying the backbrought research for the chips, or making the chips. I can point out as well down here, we've got Graham, which is going to come up as a big player in machinery. And we talked about machinery having a great year. Well, it turns out this is heat transfer equipment for energy. And you're going to find out that that is actually one of the driving forces here is the production of energy into the utility space. So in fact, machinery is part of this story of this tech boom. All right, so here we are. There is Graham. Working capital turnover rising because they're doing so much business now in this space because of the need for energy. And what does these groups do? Let's take a look at SEI, which is another one of these big booms that happened a little earlier, ticker SEI. That's a Solaris Energy Infrastructure. And of course, what's going on here is modular and scalable solutions for power generation, control, distribution, and management. So that is the story of these businesses, that we're seeing this move towards heat pumps or energy distribution. And that's the small companies that are worth knowing about, ticker GHM, ticker SEI. Now down here, I've got sales per employee, and I've got Micron, of course, and Ciena. They don't actually look, from a sales per employee perspective, that strong, out of the ordinary, or anything at all. So that also gets interesting. Sometimes we'll talk about some of these accounting measures in the next series of slides. And, I'll find out that some of these stories of a boom are not actually supported. They're just structural profitability that's going on for a number of years and not a boom. All right, so that begins this part of our talk. Return on invested capital will be up here. And then down here, earnings margins, profit margins. Of course, here is the story we want to talk about. This is the office equipment, which has now got up to a return on capital 40% annual, earnings 50% annual. Just, again, but it's always been a very high margin business, and it's just growing its return on invested capital in this post-COVID and then post-COVID environment. Here you see a hockey stick again. This is the electronic space, and suddenly it's picked up for reasons we all know about. They're getting a lot of profit out of these businesses. Now, how does this work? Well, return on invested capital is net operating profit after tax over invested capital. So there is a fundamental breakdown. First, we're seeing a shift to high margin demand. So they are finding their way into high margin. When the early stage of the COVID pandemic, it was about computers for laptops and home use because of the remote working. This shifted into the enterprise space. Enterprise digital transformation, automated industrial electronics, advanced networking, and data center hardware, cooling systems, power distribution, like we talked about, SEI and Graham, these types of groups. This group called nVent, keep that in mind. That's another name you need to know about that's providing for these enterprise groups. So companies in these spaces have also done something else with the invested capital. They've outsourced physical manufacturing to third party. This is your story of these groups that we all know about, contract electronics manufacturers, keeping the invested capital down, keeping the profits up. So high margin switch to NOPAT, raising the top part of the ratio and keeping the invested capital down. That's what's going on. It's this model of how the boom is being financed and run that's worth understanding from this return on invested capital perspective. Okay, so when the forward 12-month earnings hits a parabolic trajectory alongside return on capital, which we're going to see valuations on a forward look, not earnings that have happened but are expected to happen, going parabolic. So this is the question of this situation we're in right now. Is this a structural shift that's going to go on to an S curve and then stay higher, or is it demand supply overshoot where people are just supplying so much because they think that demand's going to happen and demand may not materialize? That would be, in this context, a bubble. So what we're going to learn is there is a structural transformation, but it's inside a cyclical boom where people are supplying. So I do think the parabolic rate of change in these forward earnings is likely unexplainable, and we probably are at the upper bound. Because what's going on here is a supply bottlenecks and buildouts that's getting very frantic in the accumulation and deployment and optimization of this stuff. But they're at some point going to get hold of this equipment and start to move in a more single digit or low double digit growth phase, not like these triple digit numbers. So what can happen here from an equity strategist perspective, which is what we're talking about today, multiple compression. Forward earnings multiple compression would take the stocks down quickly and strongly. So that is the concern here, is that we do have a situation where people are overthinking the structural change and underthinking the supply-demand overshoot, and that can lead to multiple compression. Multiple compression will take your stocks down, and it will take it down in advance of warnings that people will be giving about supply-demand issues in the marketplace for the electronics groups, chips in particular. So here we have it. Again, I just want to focus on 35 and 31. They're over here. You can see, of course, the forward earnings is just rocketing through 2025. And down here, you have the enterprise value of this other group, 36 telco equipment. Those are the optical groups. And look at this situation, also just rocketing. So these three groups, you can see in the context of all of this, are just so extraordinary. And here you've got that energy story playing out for it, but it starts much earlier. It doesn't have this parabolic move. These are the moves that have kept this stock market the last year alive in these spaces. And they're all related, like we've talked about, and you can go back to those original slides that have the ticker names if you want to know about who's going on. But just keep a look at what happened. At first, of course, the collapse during the COVID pandemic. Then it went through ChatGPT 2022, and then it just rocketed this last year across the board. That is not sustainable. And these are, by the way, a valuation measure, at enterprise value over sales. So that's the stock market here for these telco equipment providers. Those are the Cienas of the world. They're just in a massive bubble, basically. So cyclical shift, cyclical bubble, or structural shift. So here's the debate. Sustainability. This is fueled by hard capital commitments, not just internet eyeballs and non-GAAP revenue from the 90s. There are hard capital commitments by major hyperscaler companies. So that the hyperscalers are doubling down on AI clusters, advanced networking, and storage overhauls, solid state drives, advanced power management and cooling, like we talked about. Data center expansions are multi-year capital investments. They can't be unplugged very easily. Secular automation and Internet of Things wave. Beyond the data centers, we've got some sticky demand from factory automation, robotics, and automotive electrification. That's certainly happening too. And a lot of these have gotten, we talked about, into high cash conversion, free cash flow being freed up by contract manufacturing. So this is certainly the case. A lot of this is happening. However, let's talk about the case for the bubble. One is, the divergence from the core. The PC business, boomed in the early stages of the COVID pandemic, post after that, and that's not what's happening here. So there's a divergence between what's happening in the consumer space, as I've shown you in apparel and consumer staples, miscellaneous, that the actual consumer is not that strong. And the double ordering mirage might be what is really playing out here, which is you can double or triple order parts you can't get a hold of. So you go to 2 or 3 suppliers for chips, maybe high bandwidth memory chips that you can't get a hold of, and you put 3 orders into 3 different suppliers with the need that only one order needs to come in, you'll cancel the other 2. So what can happen here is, ordering over actually planning to keep the orders, because you're going to cancel 2/3 of the orders if you get a hold of the equipment you need. So this is a double ordering mirage situation. And I think that's a joke. Think about the Cybertruck. There were millions of orders for the Cybertruck, but in reality, the actual purchasing of the Cybertruck, once it became available, has been significantly less. So is this a big Cybertruck situation? The other thing is macroeconomic trade frictions right now are astonishing, right? The tariffing situation, the export restrictions. Now we've got all these supply chain issues that are tied up in the energy shock. All of that can also cause massive issues for these groups. And you can see this is a totally different story. This is about this confluence of issues with supply chains. And over here is just this longer term story. So it is a structural shift, but it's happening in a manner that's creating cyclical bubbles. So where do we see this? Well, look at this. This is the actual free cash flow of these businesses. There's 31 and here's 35. And actually you can see that basically there is some cash flow declining in 35 of late, whereas here it's rising. So there is this pattern, and I would not say this, it's certainly going up, and it's certainly going up here, but it's not as dramatic as you might expect the other side. It's not parabolic, and that's what I would point out to you. And the other thing that's interesting here is the oil industry. Integrated oil industry has been doing quite well for some time, and that's been unspoken story. So you've got that picture of this book value growth by the big major oil majors, and then you've got these boom cycles that are going on with these electronics companies. So here you've got the gross margins, and of course some of the issues here. The best one would be the banks, of course, and some other groups. But we need to keep in mind that this is not all boom and bust situations. There are situations within this that are not doing that great. For example, the steel industry had its moment in the early days of COVID, but now it's back down. There are different stories here to play out. Inventory turnover. This is mainly a different issue. It's really about this story, which is industry code 46, which is the major banks. That's the money printing. So what happened here is the banks shifted to overnight repos and short-term securities when the government financed so many quantitative easing. They basically bought all the long-term bonds, and they shifted to these banks in the inventory that banks consider. And you can see this is another boom, which is actually just the sheer amount of money that was put out there in the system. Now down here, of course, we've got 36, which is telco equipment, and this is enterprise value. And again, this is the bubble, the telco equipment bubble. You can see I have other groups here. Here's 31 and 35, and that enterprise value to sales is nowhere near outrageous like this equipment. They're all three, as we've talked about, here, and here, the same boom, structural change, but this one is accelerating way beyond this one. These are actually within the norms of the last few years. Not that dramatic, strong, but not that dramatic. And this one is, of course, out of control. And that just shows you where we have a story of excess, which is in these optical electronic, some fiber companies versus these other groups. So that's it for me. I hope you enjoyed the first part of whether there's structural change and the parts of it that are cyclical. Now, this turns us back to the original thing I proposed, which is how do we put the energy into these enterprise groups and how do we keep it going? So this is another part of this investing journey. And the first thing we need to start talk about is the story of that really began with emissions. Annual carbon emissions for China over the last 25 years have been driving up as India. We know these two groups are industrializing dramatically. And this is really a story of the world's domestic electric and heat demand, right? That's what we know is going on. So you're going to electronics, well, that's electricity. And heat. Heat is for these companies' power. And of course, the issue is to get carbon emissions down in China. If it's going to be the largest supplier like India and China have become, they have to start getting their carbon emission per capita down. So carbon emissions in China and India are the massive thing that are driving them towards renewable production, electric production. Keep this in mind as a backdrop. The United States, carbon emissions are actually slightly down as a result of our not being such a manufacturing power anymore like the Chinese are. So here we got the solar story. I just want to point out module spot prices here. They have just plummeted since 2022 to 2026. So this is a example of what can happen after people overinvest. This is the Chinese manufacturers of solar, and they overinvested, and then the prices fell from 30 down to 8. I mean, a massive collapse in prices. So if you think prices can't collapse for these chips, just look what happened to solar energy modules. It was a solar module spot price collapse. So it was immediate spot prices. And we can get into what happened here. And that's this story. So you got to keep in mind that a solar module is a package connected assembly of PV cells. This is, the panels that you see people put on their homes. So prices fell from 28 cents to 8 cents. And what was it? Overcapacity. Heavy state-guided investments by the Chinese manufacturers. They scaled by the end of 24. There were more than double the annual installations at that time. So that started intense price wars, just like we might see in chips sometime down the road, or these optical companies. And the shift to a more efficient N-type technologies created advanced generation. So what they do is they dope these panels with phosphorus. This is called the N-type. So there was a shift also in these panels towards these more valuable doped panels. And of course, this gets to the idea of Wright's law, which is just simply economies of scale in these businesses. So it was a mixture of things, but they overbuilt. They had a technical change. There was massive overcapacity and scale that drove everything down in price. So keep this in mind. You can have a massive boom, but actually cannot be, in the end, sustainable in terms of the prices that people charge. It goes the total opposite way. It happened in solar modules already. It happened 2 years ago. And this is happening in China and its export markets now. They are dumping, basically, solar modules. So the other thing we got here is wind production, turbine installation. Again, China, just in a massive player. And these nacelles, talk a little bit about nacelles. They are the driving force. This is like the wind box, not the blades, but the wind box. So you get issues here with towers, of course, and blades. You know what those are, but then the nacelles are the equipment inside that are converting to electricity. And you can see these are the big boom areas. China in particular is just going to be driving up their wind production and installing it. And most of these headquarters are in China. So wind production on top of solar is finding its way into China. And as like I talked at the top of the renewable energies, this is because of their carbon emissions and their problems with their manufacturing. They're really focused on solar and wind. And that's why they overbuilt it. They still think this is the future for them to get their act and be competitive and not create this huge global warming problem. So, what is in the cell? What they are is, like I talked about, the rotor hub, the gearbox, the generator, and turning this thing towards the wind, the yaw system. You can see these if you think of these big, big things with the towers and the blades. It's that little equipment that's at the center of that blade. I think that's where the housing at the top of the turbine tower, like it says, that's where it's sitting, directly behind the rotor blades. It's the engine room of these things. So the cells are what's going, and they're unbelievably blistering speed of production. And one, again, massive central mandates. There's an offshore wind rush and scaling and this domestic supply supremacy. China controls the vast majority of the supply chain for rare earth magnets, which are vital for these generators inside these nacelles. So when you get into the rare earth story, you get into these nacelles, and that's what they're built on, is this ability to take the rare earths into these nacelles and then sell them. And they're being funded for export markets by the Chinese government, aggressive funding for this business. Again, at scale with a competitive advantage in rare earths. That's how the Chinese are doing it. So then we get to global hydropower. Hydropower, another possibility for energy. And I want to talk about this one massive improvement, which is Ethiopia. I looked through these slides. We get a lot of stuff to talk about, but really the Ethiopian story I thought was fascinating. So what has happened? So Ethiopia is the world's most aggressive expansion for hydropower. And again, it's domestic state funding. A lot of these energy groups outside the United States are being state funded, and they're Ethiopian Electric Power, EEP, is doing it, but they're doing it with Italian and actually even US GE Vernova is participating in this. The Chinese are in there, but it's really a multinational build. And of course, the Italians are a big part of this. And what we've got here is the Grand Ethiopian Renaissance Dam and hydropower projects along this group called the Omo River. So Ethiopians had an untapped source of hydropower. That's what they're working at. Fascinating to know these things in just terms of global context. The next one we'll get to biogas. Biogas is another source of renewable energy, and the massive player here in this business, and you can see it right here, is Germany. Germany is in the biogas business. So what is going on here? Let's take a look at this. Germany is rapidly expanding biogas and biomethane production to replace imported natural gas and meet 2025 net zero emissions targets. So this is a fight over energy independence, and it's got a clean fuel mandate. So Germany is powering ahead in this business beyond any other group. And again, it's not just a market effect. It's a biomass support project from the German government. So what you're seeing across the renewable space, whether it's in China solar, China wind, Ethiopian hydro, or German biomass production, these are state-led initiatives with state-led structures. This is not just a pure market-based story of all these things that are getting built around the world. This is a great slide, and of course, it's a little much for us to talk about in this production, so you can get a hold of these slides from us and read it at a later stage to understand what's going on. It's fascinating stuff, and I do recommend you get these slides from me. So the final charts will be about this global renewable energy capacity additions. And of course, all you need to see here is this story, China. And behind it, the European Union, that would be Germany and people like it. And then us, we're actually third now behind China and the European Union in this story. This is all I think we want to focus on here is renewable energies outside the United States are and only going to continue to be with this Iran conflict. A huge move. But of course, as I've stated today, it's really led by state-led companies, state-led models, and state-led support that's doing it. So I'll finish up with one final thing. Distributed solar power versus utility power plants. These are two parts of the photovoltaic story of solar. And keep in mind, they're both moving ahead. So you can put them on roofs, commercial buildings, schools, or in parking lots or carports, or you can build them across large swaths of undeveloped land in the desert. You see this out here in California, rural fields or brownfield sites. So it's not one or the other, it's both. And it's just a matter of understanding distributed power, meaning distributed out in the world, versus power plants, massive scale power plants in one place. So that is all I have for you today. And you can certainly get a hold of these slides by giving us a call at 866-794-6065, or more likely, just send us an email, strategycall@zackspro.com. If you're looking for any of this material, these phone numbers, and these emails, you can also find us on the web at www.zackspro.com. We do have a LinkedIn page at Zacks Professional Services, and we put out some Twitter feeds at ZA Tools. But I hope this has been a useful discussion of these booms in electronics and chips and optoelectronics and the downstream story of how the world is going to supply this energy for this type of economy, this type of structural change that has happened at this point in time. So that's it for me. I hope you enjoyed it.